Reinforcement learning trading strategies. Our reinforcement learning is transforming the way traders approach the markets. And for investors in the United States, understanding this technology is no longer optional if you want to stay ahead. Traditional trading strategies often rely on static rules, human intuition, or historical patterns that may not adapt quickly to changing market conditions. Reinforcement learning, on the other hand, is a branch of artificial intelligence that allows algorithms to learn from experience, continuously improve their decision-making, and optimize outcomes in complex, uncertain environments. This approach has been successfully applied in robotics, gaming, and autonomous systems, and now it's making waves in finance. Traders and investors who understand the core concepts of reinforcement learning and how to apply them responsibly can gain a significant edge in today's fast-moving markets. At its core, reinforcement learning is about learning through interaction and feedback. In a trading context, the algorithm, known as an agent, interacts with the market environment by taking actions such as buying, selling, or holding assets. After each action, the agent receives feedback in the form of rewards, typically based on profit, risk-adjusted returns, or other performance metrics. The agent uses this feedback to refine its strategy over time, learning which actions lead to better outcomes in different market conditions. Unlike supervised learning, where models are trained on labeled data, reinforcement learning is dynamic. It learns through trial and error, continuously adapting to new situations. This capability makes it uniquely suited to financial markets, which are constantly changing due to economic events, policy decisions, and investor sentiment. One of the fundamental concepts every trader should understand is the balance between exploration and exploitation. Exploration occurs when the agent tries new strategies or actions to discover potentially better outcomes, while exploitation happens when it leverages what it already knows to maximize rewards. Striking the right balance is critical because markets are unpredictable. A strategy that works well in one market regime may fail in another. Reinforcement learning algorithms are designed to navigate this balance intelligently, testing new approaches while still taking advantage of proven tactics. This is something human traders often struggle with, because emotions such as fear and greed interfere with consistent decisions. With reinforcement learning, the agent can objectively learn and adapt without emotional bias, giving traders a potential advantage. Another essential concept is the use of simulations, or backtesting environments. Before deploying a reinforcement learning strategy with real capital, traders create a simulated environment using historical market data. This allows the agent to practice, learn, and evaluate potential strategies without risking money. These simulations help the algorithm understand the consequences of different actions, learn from mistakes, and optimize its approach. In the United States, where market volatility can spike due to factors like Federal Reserve announcements, earnings releases, and geopolitical events, simulations are particularly valuable. They ensure that strategies are tested across a wide range of scenarios, making them more robust when applied in real trading conditions. Reward functions are another critical element. In reinforcement learning, the reward function defines what the algorithm is trying to achieve. For trading, rewards are usually linked to financial performance, but they can also incorporate risk metrics, transaction costs, or drawdown limits. For instance, if a reward function focuses solely on profit, the algorithm may take excessive risks to maximize short-term gains. By incorporating risk-adjusted measures into the reward function, traders can guide the algorithm to make more sustainable and responsible decisions. Understanding how to design effective reward functions is crucial because they directly influence the behavior of the agent and ultimately determine the success of the trading strategy. Reinforcement learning is also highly effective for portfolio management. The agent can learn not only which individual assets to trade, but also how to allocate capital dynamically across multiple instruments. By continuously adjusting positions based on market conditions, reinforcement learning can optimize returns while controlling risk. For example, an algorithm could gradually reduce exposure to volatile sectors, while increasing allocation to more stable investments during periods of market uncertainty. This adaptive approach is difficult to achieve with traditional static models and gives traders a significant advantage in managing complex portfolios. Despite its power, reinforcement learning comes with challenges and risks that traders must understand. One major challenge is overfitting, which occurs when the algorithm learns patterns that are too specific to historical data and fails to generalize to new market conditions. Overfitted models may look perfect in backtesting, but perform poorly in live trading, Computational complexity is another concern. Reinforcement learning requires significant processing power and large datasets to learn effectively. This can be a barrier for individual traders, although cloud computing and accessible platforms are helping lower this barrier. Perhaps most importantly, no algorithm, no matter how sophisticated, can eliminate uncertainty. Markets are influenced by countless unpredictable factors, including macroeconomic events, policy changes, and investor psychology. Reinforcement learning improves probabilities, but does not guarantee profits, and this is a lesson every trader must internalize. Data quality and pre-processing are additional factors that can make or break a reinforcement learning strategy. The algorithm's learning is only as good as the data it receives. Inaccurate, incomplete, or biased data can lead to poor decisions. For instance, if the historical dataset does not include periods of extreme market stress, the agent may fail when such conditions occur in live trading. Cleaning, normalizing, and diversifying datasets are therefore essential steps. For anyone serious about building reinforcement learning trading strategies, another area to consider is risk management. Even with a well-trained agent, trades can go against expectations, and markets can move in ways the algorithm has never encountered. Successful traders integrate reinforcement learning strategies into a broader risk management framework. This includes setting stop-loss levels, managing position sizes, diversifying portfolios, and having contingency plans for market shocks. Reinforcement learning should enhance a trader's decision-making process, not replace it entirely. Combining human judgment with AI-driven insights creates a more resilient and effective trading approach. It's also important to remember that reinforcement learning is a tool, not a magic formula. Its primary value lies in its ability to analyze large amounts of data, identify patterns, and adapt strategies over time. For U.S. investors, this means being able to react more quickly to market changes, test multiple scenarios, and make decisions based on probability rather than guesswork. The technology democratizes advanced trading techniques that were once reserved for hedge funds and institutional investors, allowing retail traders to compete on a more level playing field. For anyone serious about trading in 2026, learning the concepts behind reinforcement learning is essential. By understanding exploration versus exploitation, reward functions, simulations, portfolio management, and risk management, traders can start building strategies that are adaptive, intelligent, and data. Education, patience, and disciplined execution remain critical. But reinforcement learning can give traders a powerful edge when used responsibly. If you are finding this content helpful, now is the perfect time to support the channel. Subscribe to stay updated on advanced trading strategies, personal finance tips, and AI-driven investing tools. Liking this video helps it reach more people who want to improve their trading skills and financial knowledge. Drop a comment below sharing your thoughts on reinforcement learning or the topics you want us to cover next. And don't forget to share this video with friends or family members who are serious about modern trading strategies. The future of trading is adaptive, intelligent, and data. Reinforcement learning is one of the most exciting developments in this field, offering traders the ability to continuously learn, optimize, and improve. However, technology alone is not enough. Success comes from combining AI tools with solid trading principles, risk management, and ongoing education. By understanding and applying these concepts, U.S. traders can gain an edge, improve outcomes, and navigate markets with confidence. This channel is dedicated to helping you understand advanced investing and trading concepts in a practical, actionable way. By subscribing, liking, commenting, and sharing, you join a community focused on smarter money decisions, long-term growth, and mastering the tools that can give you an edge. In today's markets, keep learning, stay disciplined, and leverage technology wisely to achieve your financial goals.